If you're in your 30s living in Singapore and you have only invested $1,000 so far, give yourself a pat on the back because good job, you've gotten ahead of 90% of people and you've just gotten started. But let's be real, $1,000 is not going to move the needle and change your life in a very big way. For people like us who rely so heavily on income mainly from our jobs, what if you lose your job next month, next week, or even tomorrow? What will actually make a bigger difference in your life is building up a $10,000 portfolio which can potentially pay for your $20 Thai fund in the future after years of adjusted inflation. So in this video, I'm going to show you how to build a $10,000 investment portfolio that gives you good enough returns when you retire, but safe enough such that you can sleep peacefully at night. So let's start off with why $1,000 is simply not enough. If you watched my last video on how to start investing with $1,000 in Singapore, you know that was just to get your feet wet, build a bit of confidence, and you've probably already seen some sweet returns from it. Are you already starting to get addicted to investing? But here's the truth. $1,000 alone is not going to move the needle. Even $5,000. Let's say you somehow double it through nothing but sheer dumb luck, which is something that I did in my trading career as well, which is already super hard. That's only $5,000 more. Right? If you lose your job tomorrow, will $5,000 really save you? Maybe it buys you a couple months, but that's it. And that's why I created the Financial Freedom Project, a 3-part video series to inspire 1,000 Singaporeans in their 30s to build their first $10,000 portfolio. Because $10,000 is where investing starts to feel a bit more real and tangible, and that's when your returns go from mere copy-paste money to become something that can meaningfully impact your life. So I just came back from Perth, Australia during one of my most recent trips a couple weeks ago, and the food prices were totally insane. I thought that because Singapore's currency has been steadily increasing and our currency is 20% bigger than the Australian dollar, I thought when I went there I'll be a rich man being able to buy anything I want and eat whatever I wanted. Totally wrong, because imagine paying $25 for a plate of nasi padang and $30 for a plate of fish and chips. Whatever currency difference that we have or advantage that we have over them totally means nothing when it costs so much money to eat something like that in Australia. So how are you going to travel, retire, or even live well in the future if your investing portfolio is stuck at $1,000? As high income earners, most of our money comes from our jobs, and that's a concentration risk, right? And the only way to protect yourself and gain real peace of mind is actually to scale up, diversify, and start building up alternate sources of income through investing. And that very nicely brings us to the sleep-friendly portfolio. We now live in an amazing era where you have all the resources, YouTube, Google, AI, whatever it is. There's so many new AI sources out there that you can't even keep track of them, and they can really tell you what are the best investments to go for, which has the highest returns, which has the hottest stock in the stock market right now. But why do people still hesitate to invest more money? The problem isn't a lack of things to invest in, but rather it's the difficulty of finding the right investment for you. A friend recently asked me this question: what is the best investment that I can invest in right now? So the old me in my 20s would have jumped at this question. I'll be so prepared for it. You need to invest in the crypto, you need to invest in the Bitcoin, things like that would bring the highest returns. Look at what it's done to my portfolio. I've earned 100,000, 200,000 from Bitcoin itself or crypto itself, and you should invest into crypto. But I'm so glad that I've matured right now, and my super mature 31-year-old brain said this: it depends. What investments allow you to sleep better at night? Would you be okay with 30 to 40% volatility in the S&P 500? Or will you be okay with less volatility like REITs, but it gives you consistent dividends and gives you money every single year? Don't look at what gives you the most upsides or return, but instead look at how much downside or risk you are comfortable to take. Because for all the investments that you do, and trust me on this, the recessions will come when the music ends and your portfolio is going to take a big dip. So you must be ready to stomach it before it even hits your account. You have so much more to lose now, especially in your 30s, because you have your family depending on you, so you cannot bet the farm like you did in the 20s. So figure out what you want in your sleep-friendly portfolio. Once you have figured out your risk appetite, the next step is to actually stop overthinking and putting it into practice. You can learn about swimming all you want in theory, but the truth is that you will never be able to learn how to swim properly if you don't get into the pool today. So to take action effectively and quickly, you can do so with the Longbridge Singapore app. It gives you lifetime commission-free trades for US, Singapore, and Hong Kong stocks, so it's going to be very good for beginners to start building their retirement portfolio here. If you also want to speed up your investing journey as well, participating in their new user promotion is definitely a must as well. In my opinion, the most attractive offer right now in this low interest rate environment must be the 12% interest booster that they're offering when you deposit your money into the Cash Plus funds. And you can get it by clicking on the exclusive sign up link down below that I have, or you can click here to scan the QR code. All you need to do is deposit $2,000 and you get an $18 cash coupon and the two 6% interest boost coupons for 90 days. If you want more rewards like Nvidia or Apple shares, all you have to do is complete the required buy trades and hold the funds in the account for 30 to 90 days depending on the tier that you chose. And since this video is literally called How to Invest $10,000, I just think it's pretty funny that Longbridge also happens to have a $10,000 tier in their promo where one of the rewards is a free Apple share. Coincidence? I think not. Now let's look at the game plan to build the $10,000 portfolio. Previously, you have already dabbled in the money market funds, which has the lowest risk, hence a lower return as well. As we build up this portfolio, it's time to broaden our horizons and invest into something riskier but also with more returns. One of the choices can be dividend stocks. What's special about dividend stocks is that they are stocks that pay you money through the form of dividends every single year. So this is a very nice way of branching out your investing portfolio because it feels good to just receive money consistently after just one initial investment. I started a dividend investing portfolio in the last 2 years and I built it up to a $60,000 portfolio which pays me around 5% return, which is quite common for the dividend stocks. So it was nice receiving small paychecks of $500 here, $1,000 here on random months where I didn't have to do anything but just put in that initial investment. I have since exited from most of my dividend stocks in order to focus more of my efforts into the index funds because we all know this. What you focus on grows the most, and since I've already kind of scratched my itch with the dividend investing, it's time to go towards the index funds. Index funds are basically a basket of stocks that contain many companies. Take the S&P 500 index fund, for example, the holy grail, what everybody loves on the internet. So they contain all the largest stocks in the US stock market like Apple, Google, Tesla, and so on. So you own a bit of all these biggest companies, so the portfolio is very diversified. The index funds are a bit more volatile because they can drop like 30-40% during recessions, but they also give higher returns of about 8-10% every year. This is my main way of investing right now as I switch over to a more passive investing style. My plan is to stop allocating random small amounts of money here and there and spreading myself too thin and not having a lot of stake in any one investment to really get any proper gains. And that very nicely brings us to what I like to call serious money versus fun money. What this means is that you have two portfolios that are very separate with very different goals and intentions. It's easy to tell people, oh, just invest into dividend stocks or the S&P 500 and then you don't have to do anything else and you will be a millionaire down the road. Why do so many people fail at this step? It's a simple process, but it's difficult to execute because people literally cannot control their itchy butts. They want to speculate and pick the hottest stock because they think that they're the next Warren Buffett. So let's just stop fighting that primal instinct to want to day trade or speculate and just embrace the inner evil in you. Just accept who you are and take it as part of yourself. So the first portfolio will be the serious fundamental portfolio that you will use to consistently invest your money, and this will be your main retirement fund. The second portfolio will be the day trading portfolio fund money, where you can invest in whatever the hell you want to, no matter how risky, just to prove yourself right and to validate whatever insecurities that you have in your life. So if you were to use a $10,000 portfolio as a guide, you can use a simple ratio like the 80-20 rule. 80% of your portfolio will be the $8,000 to invest into things like the S&P 500, and the remaining $2,000 you can use to invest into things like crypto, individual stocks, or even penny stocks if you are feeling cheeky. By doing this, you'll know that no matter how much you screw up that day trading portfolio, you'll know that you will always have the long-term portfolio to fall back on, and you have to consistently build it as your insurance for retirement. Who knows, you might even do super well in your YOLO investing and you might prove me wrong, right? So if that really happens to you, please let me know in the comment section down below. Now, by the time you are here in this video, you should have already invested $10,000 and you can click off the video. But if you're still watching here, it means that, damn it, I failed to convince you to invest your $10,000 and this video has just become mindless entertainment for you and you've just wasted your time. So consider this my last ditch attempt to get you excited about the future if you invested this $10,000 because it's worth way more than you think. I recently watched this interview on My First Million where this guest called Monash talked about something really interesting. He said that there are fundamentally only two things an investor has to think about, which is the percentage returns and how long your runway is, which means how long you're investing for. Of course, the longer the runway, the more money you'll make, and you'll be able to make millions of dollars if you're willing to look far enough. So assuming you're 30 years old right now and you're planning to retire in 35 years time, for every $10,000 that you invest, assuming a conservative return of 8% in the S&P 500, you will have $147,000 when you reach 65 years old. Isn't that insane? Just by not investing a mere $10,000, you are losing out on almost $150,000 worth of investments in the future. Now here's something even more exciting. You are going to earn even more money in the next few decades, especially into your late 30s, 40s, and even 50s. So you have even more money to invest, and if you can invest just $10,000 every single year, which is going to be a small portion of your income, you will end up with over $2 million at 65 years old. So this is almost, and I must stress the word almost, a somewhat guaranteed way of becoming a millionaire if you stay consistent with your $10,000 investment every single year. The crazy part is that you're not going to use the entire $2 to $3 million at 65, but instead you will continue to grow after that at a crazy speed even till the day that you die. But if you still feel feel that investing is a very scary thing to do and you want someone with personal experience that you can trust and walk you through this entire journey of investing your hard-earned money, I'm now offering one-to-one personal consultations. You can click the link in the description box to find out more. Hopefully, I've done my job well and this video has gotten you excited and ready to invest your $10,000 into the stock market. In the next video, we're going to talk about what happens after you've invested that $10,000 and how we can better invest more consistently to achieve that millionaire status that everybody wants. If you enjoyed this video here, then you'll probably enjoy this video here. Thanks for watching, have an amazing day as usual, and I'll see you guys in the next few videos. Bye bye.